Hi, I'm Darren Langer, Head of Australian Fixed Income at Nikko Asset Management. We currently live in very challenging times, particularly for investors heading towards retirement. And we have a world where we have extremely low interest rates, poor economic outcomes for most Western economies. We have very volatile investment markets. And for most retirees, probably a longer period of time in retirement than in any past period of history. All of these add to significant challenges for how people invest. So we get asked lots of questions from investors, particularly around how do we protect our capital in these uncertain times? Are there better ways to generate income than just cash and term deposits? We also get asked, are those alternatives more risky for them? And if they are uncomfortable with higher volatility, how do they reduce risk? So fixed income is an ideal asset class to try and answer some of those questions and probably provide some of the benefits that investors are looking for. But as I alluded to, there is a lot more to fixed income than just term deposits and cash. But like most asset classes, fixed income has a variation of assets from low risk right through to high risk. But we believe that a conservative, low-risk approach to fixed income has many benefits, particularly for investors who've traditionally invested in cash and term deposits, and that as part of a diversified portfolio with equities, they do provide some capital protection from volatility in particular. We believe that a conservative fixed income portfolio should have a mixture of investment-grade government and corporate bonds. They should generally be fixed rate and have a blend of maturities. And this is the key to achieving consistent income and higher returns without introducing additional volatility. So historically, bonds do offer a higher return than cash and term deposits. Fixed income funds also do give you immediate access to your cash. There are no withdrawal penalties for leaving an investment early, as there often are with term deposits. And as part of a diversified portfolio, fixed income can protect your capital from higher risk assets, particularly in conjunction with equity portfolios and other higher risk assets. We also believe that it's good to have a variety of investments in a portfolio, which you don't get when you traditionally hold term deposits. Term deposits are generally exposure to one single bank. However, those are still very safe and good investments, but we think it's much better to have a variety of assets in a portfolio rather than exposure to a single set of cash flows. Conservative fixed income funds generally also deliver positive returns across most market environments. So as you can see in these charts, fixed income funds generally outperform cash over all periods. There will be slightly higher volatility in prices over the short run, but over a 3-year period, generally the outcomes are significantly better than cash. And as you can see from the chart on the right, during periods of high volatility, particularly in equities, and that's the high peaks in the rolling 1-year charts, that's usually periods where equities have done very badly or had a lot of volatility. So fixed income does provide some buffer for poor equity returns. So looking forward, we think that cash rates are going to remain low for some time. And that's an environment where bonds generally do perform very well. And even when cash rates are low or even negative, as we've seen in some economies, bond funds can still offer positive returns. There's also very little reason to expect interest rates to go higher in the next few years. And most central banks globally have told us that won't be the case. And in a low rate world, we expect all asset class returns to be significantly lower than what they have been in the past. The Nikko AM Australian Bond Fund is ideally suited to help investors solve some of those problems. I've been working in fixed income markets now for over 30 years and at the Nikko AM team for around 12 years. Our team of 5 is a mixture of older investors who've been through markets for a long period of time, but we also have a good mixture of diversity across genders and backgrounds as well, which helps us provide a comprehensive and different perspectives across markets rather than just all looking at the same sorts of things. We're an active manager, but we don't believe that means having to take undue risks to achieve additional income. And we believe fixed income, if included as part of a diversified portfolio, should help overall reduce portfolio volatility. So the Nikko AM strategy in bonds, it's a conservative managed fixed income strategy. It provides investors with consistent returns above the prevailing benchmark and consistent income. It also should provide buffer against equity volatility when used as part of a diversified portfolio. The way we look at it is the fund aims to deliver an active return for a competitive fee, and it's managed by a very highly experienced team of fixed income specialists. The fund's been available to investors for over 20 years and is currently a top quartile performer over the last 3 years. And the fund is also highly rated by research houses across the industry. Thank you for listening today, and if you have any further inquiries, please contact your investment advisor or go to the Nikko AM website at nikkoam.com.au.